Hello everyone, my name is Chris, GBC for short. I gave a trade forecast for British pound Canadian dollar earlier, and I said the market was going to buy because it has broken structure to the upside, and of course it came and took out this inducement. Inducement is simply the zone that was that led to the break of structure that led to break of structure, which has a lot of market orders there. So usually what happens is that when the market comes to that very zone, it takes away that very zone, the buy orders that are there, or if it's the sell orders that are there, then the market goes ahead and buy. And of course, it gave this very bullish engulfing on the 1 hour. These are the current having the 4 hours. So it gave a bullish engulfing. I was expecting that when market comes to this very zone, it was actually going to buy. And of course, it gave a reaction. If you can see this green candle, that was that is embedded within these two red candles over here. So it was actually supposed to buy. So, but this one was simply an inducement for buyers, and of course, it took out all the buyers. So, how does the market usually work? How does the market usually operate? The market operates in this very manner. Okay, market operates in this very manner from the higher time frame perspective. Okay, this is go, comes here, takes away the previous high, come again, takes away the previous high. It means that I'm still very bullish, comes here again, takes away the previous high, then comes here, maybe fails to take the previous high, then maybe it may be giving signs that it wants to reverse. Then simply happens is that it comes and it takes the previous low, and I'm expecting that when price comes to this very zone here, it should sell. It should sell. It should sell. It should sell. So we have something like this over here. Okay. Okay. That's what we have over here. That's what we have over here. So it came here, taking away the previous day high. So I'm expecting that when price comes to this very zone here, it's going to sell. Okay, is it over here? So expect that when price comes here to sell. Now, why am I saying this? I'm saying this because I am dealing with a higher time frame. What do I mean? You see these horizontal lines that are here, they simply represent the start of a week, the end of a week. The start of a week, the end of a week. Start of a week, end of a week. When this market came down, it simply took out the previous week low. So I'm expecting that when price comes to this very zone that buyers were induced to go into the market, what will simply will happen is that it will sell. The way the market works is this: the market works in terms of let me remove this. Remove this. Let me use this. Okay, if I can use this. Okay, the market works in terms of support and resistance, of course, on the higher time frame. Let's just keep it simple. Let's not really use the aspect of demand, supply. Let's just keep it very, very simple in terms of support and resistance. Okay, on the higher time frame. I'm saying this because of okay. Now this was a high. This was a high. Took out this very high. Took out this very high. Then when market comes back to this very zone here, it bought. Then I'm expecting that within this very zone here, it was supposed to buy up again, but rather than buying, what simply happened was that it sold down. So I expect that when price comes back to this very zone here, what will happen is that it will sell, and of course, it sold. So coming here again, Look at this very high here. I'm expecting market to sell from this very high. But simply what simply happened was that this very zone here, this very zone here was broken. So since this very zone is broken, I'm no longer looking for a sell. What I'm simply looking for now is a buy. And of course, the market came down here, it bought. Now, if I have to explain higher time frame in terms of support and resistance, what is actually a support? A support is a zone where sellers were induced into the market. What I mean induced, that they were made to believe that the market was going to sell. Rather than selling, it actually bought. On buying, it will now form a foundation. It will now form a support for further buys to take place in the market. That is a support. Now, what is a resistance? A resistance is a zone where buyers were induced. When I mean induced, buyers were made to believe that the market was going to buy. But rather than buying, the market now sold. What will now happen is that the market will now form a ceiling. It will now form a resistance for further sell. So when that happens on a higher time frame, now I'm not talking about 15 minutes. I'm not talking about 1 hour. I'm not talking about daily. I'm talking about weekly. That's why I use the weekly. Why am I using weekly? I'm using weekly because the weekly time frame, it actually gives a very high probability setup. In other words, it gives a very high chance that these very markets that has created this very setup, it will actually execute the setup which it has actually given. So if we go on, so I would say resistance is simply the zone, permit me to use the word, where buyers were fooled into the market. Then support is simply a zone where sellers were fooled into the market. They now formed a basis, now formed a foundation for further buy. And if we continue with this very market, we observe that simply went on and on, went on and on. Okay, so what happened? Came here, broke this very zone, took it up, came back here, bought up. Then I come here again, broke here, came here. What am I looking for? I'm simply looking for a buy. Simply looking for a buy. And of course, market came here, took this very high here, bought up here. Then when it came here, what am I looking for? I'm looking for a buy. Gave a bullish engulfing on the 4 hours, and of course it bought. It bought. Now let me come to this very side. Now, when market took this very high here, what was I expecting? I was expecting that the market was going to buy. Well, rather than buying, it now sold. So what am I expecting that the market will do? I'm expecting that when the market comes back to this very zone here, where buyers were fooled into the markets, where buyers were made to believe that this market was actually going to buy, I'm expecting to sell from there. I am not to put a buy there again. Why? Because that very zone, this very zone over here, it has formed a ceiling. It has now formed a basis for further sale in this very market. So what simply happens in Forex is this: when you execute a trade and it doesn't really go your way, it gives you another opportunity for you to actually see other opportunities that you can actually trade